Hi, thanks so much for joining in. You're watching Your Money Matters on NDTV Profit, and my name is Alex Matthew. At the onset, from everybody here at NDTV Profit, let me wish you and your families a very, very happy Dussehra in advance. And I hope that this ushers in great prosperity in the remainder of this year. To talk about the first topic today, I've got Nisreen Mamaji, who's the founder of MoneyWorks, and Navneet Damani, who's a Group Senior Vice President, Head Commodities Research at Motilal Oswal. Thank you so much to the both of you for joining in, and wish you and your families and your teams season's greetings. I wanted to talk about gold with a bit of a twist this time around because of everything that we're seeing with gold and silver prices. It's traditional to go out and buy a little bit of gold on Dussehra, and I want to give my viewers a bit of a sense of what to do and how to plan their finances. So at the onset, the question that we're asking is it a good idea to buy the minimum possible amount this time and maybe push your purchase to the next possible festival and not too far away? So Navneet, let me first come to you on gold prices. We've spoken over the course of the last several months, and you've commented on it as it has risen to this point. And the last time we spoke, which is not too long back, you said that perhaps it might be hitting a level where it's getting a little unsustainable. Does that hold right now?
Well, absolutely. It's kind of rallied by about 18.5% or maybe 19% as we speak in a matter of last 18 trading days. So such kind of exuberance or such kind of rally that you're seeing into gold prices is little discomforting for many retail market participants, but central banks are still comfortable with these levels. They keep on continue to adding gold as and when their comfort level is being seen over the last 3 months. So they are price insensitive at this point in time. And given that we are almost inching towards $4,000 and the buying looks relentless, it looks like maybe this time retail participants are going to have a hard time purchasing a bulk of gold this Diwali.
Oh, well, I won't underestimate them at all, because people are buying luxury apartments in Mumbai and other places in the country left, right and center. So there should be appetite nonetheless. But Nisreen, I'll come to you. Generally, when people buy gold, and often when they go out and buy gold in jewelry form, they're not really looking to sell it again. It's just the act of buying gold. It's what their grandparents and their grandparents before that have done. Do you see anything not wrong, but faulty from the perspective of pure personal finance? The rules, of course, sometimes the rules have to go out of the window.
Yeah, you know, very rightly said, Alex. Let me begin by, wishing both of you and your families and teams a very happy Dussehra. I think that you've, talked about a very important point here. So typically, on festivals like Dussehra, Dhanteras, we do buy gold, as a ritual and also for gifting. But, from the sentimental point of view, it makes a lot of sense for us to buy the physical gold. But the only issue is that, you can't, it's kind of, you can't break it up. If you have a fixed amount, you want to buy, say, 10,000 rupees of, a particular gold coin. So in the physical gold, it's half a gram, a quarter of a coin, or, 1 coin. You can't really break it up. So it's indivisible to that extent. But definitely from the personal finance point of view, what we advise our investors is that this is more for sentiment to buy the physical gold. But if you're buying it, as a commodity, if you're buying it from the investment point of view, then digital gold would be a much better option via sovereign gold bonds or gold ETFs and gold mutual funds. So that would be a better choice if you're really thinking of making money, investing, saving for the future. But from the festivity point of view, obviously people do go out and buy a bit of gold or more gold or make jewelry and, flaunt it. That's from the sentimental point of view. Alex.
Got it. So you've actually hit on a subject that I wanted to broach, and I'm glad that you have, the idea of buying physical versus digital. And here I'm talking about bullion. I'm not talking about jewelry. Navneet, recently I've heard and I've had conversations with a number of people who've said, maybe I should not buy an ETF. Maybe I should just go and buy physical gold. I anyway have a locker lying unutilized. And from that perspective, I know that it's actual gold. I don't have to worry that the ETF is not buying gold as an underlying, even though the rules state that you have to have underlying gold. What do you think about that, and what is the advice that you normally give your clients?
Well, there are two sets to it. One, if you want to convert into jewelry eventually, then physical gold is something that you could look at as an investment point of view. But typically, as Indian households, and we've seen over the last few years that, or many not years but decades, that whatever comes in form of physical gold in the household, it doesn't goes out. It doesn't goes out to the secondary market and comes into a sale. So even if it's a tactical investment, it converts into a long-term holding, or probably the period is not elongated. Though as a male, I have the right to buy gold, I have the authority to buy gold, but I don't have the liberty to sell it again. Okay, that decision will be taken by my wife, my daughter, or my mother. So that typically is the Indian household scenario most cases. So my investment is parked into gold, and it will not come out even if the prices go 1x, 2x, 3x from here as well. So that is how digital gold to a certain extent is now picking up, where you have access to sell it without any say the attachment of selling a physical gold or going it back into the market. It's in a paper format, it comes in a paper format, you played the move, you don't have that kind of attachment, emotional connect, and then you kind of dispose it as and when you're convinced. So it's more of an investment avenue. Then you look for a digital asset. If you want to use it in future, then it makes more sense to buy it in the physical format.
Got it. Okay. That's an interesting perspective. You're removing the emotional attachment. Nisreen, do you concur? And what is it that you advise people when they say to you, Nisreen, I want to go out and buy a coin or a biscuit?
So, typically on the festival days, I do encourage, the families to buy a bit of gold just from the festival point of view. But from the long-term planning, obviously, I do discourage that because, it's difficult to store. People do have lockers, but you still have to go to the locker, check it. You have to pay the locker charges, etc. So from the, investment point of view, definitely encourage digital form of investment for gold, either through the ETFs, mutual funds, or the sovereign gold bonds. The SGBs are also offering a 2.5% annual interest, plus capital appreciation and tax-free maturity gains. And on the ETF side also, it's very convenient. There's no paperwork. It's completely digital. You sell it when you have met a goal or you require the funds. Because with physical gold, as already said before me, once it's in the house, I mean, even for me, once I buy a piece of jewelry, I'm really not going to want to sell it because I get attached to the look and beauty and feel of it. I want to wear it, as a woman investor and buyer of gold, obviously me, my daughter, my mother, we will enjoy wearing it. So from that point of view, maybe just a little bit to keep in touch with the festivities. But typically, from the investment point of view, I definitely discourage the physical gold aspect and encourage digital gold because, there is exposure to the pure gold prices, safe storage, easy liquidity, and, there's no emotional attachment to anyone in the family when you want to sell it. When you have the requirement of funds, you can easily do it. And it doesn't require, demat, digital account access. It's very simple to hold.
Yeah, I just want to follow up with that because if you're talking about jewelry, and we've, I think, spoken about investment, so I just want to make this point. A lot of people now, and this is established fact, a lot of the jewelry companies, the established ones at least, seem to be moving away from the traditional jewelry and towards the studded jewelry. That mix is increasing. From their perspective, it's also something that they're going towards because it makes more business sense. The margins are better from their perspective. It's also customer profile and desires are changing. Nisreen, do you have any advice for people that are going out and buying, say, lab-grown diamonds, of course with the gold attached, but not a lot of gold if you're buying stones with them, right? Do you have any advice?
So, typically if you're buying the stones in the gold, then what happens is you're looking at the stone aspect, And from the CVD, which is the lab-grown diamond, of course, it's a very good choice because what you're looking at, and these days, younger investors and, women are only looking from the glamour point of view. They just want to look beautiful. So they're not really looking at it from the investment point of view. So you can look at, say, a 14 karat, gold rather than 22 karat that we used to buy gold earlier. And in the studded jewelry, a lot of people are going in for lab-grown stones, which, it could be diamonds, it could be emeralds. Various categories of stones are lab-grown now. And they look equally beautiful, very difficult to tell with the naked eye whether you're wearing a real natural stone or a lab-grown one. So since you're only doing it for the beautification point of view, it's perfectly acceptable to go in for a lab-grown stone and for going in for a lower weightage of, like making the jewelry in say 14 karat. And as I said earlier, from the investment point of view, to rely on hard times, it's always better to go in for the digital form of the gold. So for women, some shringhar will be, completely required and acceptable. So make it as low cost as you can.
Okay. Akshay Tritiya is next year on the 19th of April, Navneet. And so the question to you is, would you avoid buying or buy the bare minimum just to fit the festive theme and the tradition this time on Dussehra and save your purchase for April next year?
Well, Dussehra and Dhanteras too, these are two major festivities where a lot of gold has been bought across the country, and third being Akshaya Tritiya. So I think it's in a staggered manner because gold has rallied by about 18-19% in a matter of no time. And if we see year to date, it's up about 50%. If we see for the last 2.5 years, it's up about 102%. So this kind of move has already built into the prices, and I don't see a reason that a 5-10% cannot correction cannot be ruled out. Now, will it happen overnight? Or will it happen 3 months from now? Will it happen 6 months from now? That is anybody's guess. If you want to buy as a festivity or maybe as a token of this event, what is underlying, buy a minimal amount of gold and you can stagger it in the next few months on a staggered mean. Don't wait for particular dates and events. Now the kind of momentum that gold is into and the kind of world order is changing, it is better to have it in a staggered when any major decline, any major dip about 5, 7, 10% would be an opportunity. Now if it comes before Akshaya Tritiya, if it is even if it's Christmas, don't wait for it, just go and buy it.
Okay, so let's close this out then. Nisreen, since you have the option to buy ETFs and you've already spoken about the various options available, would you say that you can have a monthly approach if you've got a long-term horizon, which you should have, even with gold? Ultimately, it should be a portion of your portfolio because it affords you quite a bit in terms of diversification, purely because it does not generally move in tandem with the other asset classes. But then the last 4 years has, I think, thrown a lot of those theories out of whack. So how would you approach buying on a consistent basis? What percentage of your overall portfolio would you keep for digital gold? And should you account for your physical gold as part of your overall portfolio, or should that purely be something like you treat as maybe a suit or a tuxedo or a lovely dress? You don't count that as part of your wealth.
Sure. So, that entirely depends, the last part of the question, on how much you have of it.
Sure.
But since, Naveen has already mentioned that gold will not move by festival dates. It depends on the global dollar strength, inflation, central bank buying, etc. So it's typically, if you want to be exposed to this asset class, it's better to buy it systematically. Like you can register an SIP in a gold ETF or a gold fund. And you can buy SGBs whenever the opportunity arises and when the tranche is open, that time you can buy the SGBs. So typically, you are only buying for sentimental or ritual reasons if you're buying on Akshaya Tritiya, Dhanteras, Dussehra, etc. But it would be much better for you to register into maybe into a commodity ETF or a multi-asset ETF, wherein, you're exposed to all the asset classes, equity, gold, as well as the commodities. And you can select one where the percentage of gold and silver is higher, because a lot of the multi-asset funds are, highly exposed towards equity and maybe less in the commodities. So a little bit of research there where you look for a fund where the fund manager himself or herself will do the asset allocation between equity, debt, and the gold and silver commodities from the investment point of view, so you don't have to keep on rebalancing your portfolio. But typically, if you are taking that stance and you are, wanting to have a fixed allocation, I think about 5 to 7% of gold in your portfolio would be justified. In the recent times, it would be a good purchase, but wait and review your portfolio to make sure that, you don't cross those limits in terms of percentages. And your personal, wealth that you have in terms of jewelry, I think you need not, add that to the portfolio, because you're not going to really sell your gold jewelry. Most Indian investors will only sell their gold jewelry in very, very hard times.
Yes.
And it depends on the kind of investor you are.
All right, just to close things out, since we talked about taxability as well, let's finish that up. Navneet, I want to come to you on the different treatment ultimately between physical and ETF. Because there is this fallacy, I think, that a lot of people have, that they don't pay tax on physical gold. That's not true, right?
Well, they pay taxes on physical gold. There is a long-term capital gain with indexation if you hold it above 3 years in the physical format. However, that is what led to a lot of people buying sovereign gold bond, because the gains were tax-free, 2.5% free interest-free rate, and the holding period was 10 years. Without any indexation benefit also, you kind of make whatever gains is there, those are all tax-free for you.
On ETFs, after the latest change in the capital gains tax rules, you have a 2-year threshold for treatment of long-term capital gains, after which 12.5% is the rate, which I think a lot of people find attractive based on the kind of taxes that they would have paid otherwise. So I think that that pretty much closes the conversation. Nisreen, Navneet, thanks so much for joining me today and for putting all of this in perspective. Pleasure having you.
Thank you.
Thank you so much for having us.